Hello traders, welcome to the channel. Did SPY just confirm the evening star at the resistance of the 200 MA? Wow, is it time to fleet? Or is it could be interpreted somewhat differently? Okay, let's take a look at the market. I know in the past videos I have always said SPY is my market, but I do look at the other charts. I look at the SPY, QQQ, and um, DIA. So let's look at the SPY first. Yes, it failed at the 200 MA and then it formed a evening star and today had a doji. Seems to have confirmed the evening star. So maybe the logic next move is to go down. But I don't think the 200 is necessarily the reason why it failed at this price range. It failed because it's real price action in the past. You can see here there was some support and resistance here. So it's a neckline of some sort. That's why it's having some resistance right here. Let's look at QQQ. QQQ is pretty much in the same boat. It has some resistance in this area, happened to be the 200 MA range at $495. The DIA, the Dow Jones, is the one that's most promising because it has surpassed the 200 MA, past this resistance area. Now it has become support. And as you can see, it is in this shorter term uptrend. So you can say that it has confirmed the evening star pattern, or because it's a doji, you can say that maybe because doji means indecision. You can say that it's pulling back to trend. It's the same case on the SPY. You can say that it's um, confirming the evening star, or you can say that it's pointing to trend. All it depends on is what does price do next. So, all right. With that said, I'm going to share with you some of the ETFs and stocks I'm keeping an eye on. This is for educational purpose only. This is not financial advice. So, without further ado, let's look at the first one. So I mentioned this one in yesterday's video. First one is the Bitcoin ETF. As you can see, there was the trend line I draw yesterday. So if you look at this chart, it's more interesting to me now. So depends on what the market does next. I may just get in because for me it has formed a uptrend and now it has pulled back to trend. Depends on what it does tomorrow. I'll probably just get in um, because this one is such a low risk trade. If I get in within this green candle and then use the low somewhere here, that's a 2.5% risk. And then the first target is over here to the 50 and 200 MA and the previous resistance area. So that's a nice reward in a very short time. So that's the first one. I may just get in tomorrow if I have time. The next one is GDX. This is the gold miner ETF. This one has been doing great. As you know, gold has, you know, uh, I think gold is in all-time high now. So the gold miner ETF benefited from that. So this one, as you can see, is in the uptrend for sure. And we can even come to the weekly chart and see that. So this one here, if it's in the uptrend for sure, and depending on how you draw the uptrend line, you can see that it was at this, it passed this previous high here, and then they pull back and find support near this area, and then now it's going back up again. So this one, I think, has more potential also, but then it depends on how gold does. But with this market being so volatile, gold is performing very well. We can look at the gold ETF GLD here. So you can see GLD is at an all-time high, and it has formed this nice 45-degree uptrend, nice run up. And today it even gapped up after consolidated a few days. So it looks like there's still a lot of um, concern of the market. So gold ETF price is going up still. So based on this chart pattern, we're not late to the play. We can still get in, but just need to be cautious with the tariff taking place soon and all the news flying around. So if you decide to get into any ETFs or stocks, make sure it's a smaller position and make sure you set the stop loss so that you don't lose a lot of money. Don't put yourself in the position that you can lose a lot of money. So the next one I have is FOXA. Oops, wrong ticker symbol. FOXA. This one I like it because it was in a long uptrend, and then it came back, but it found some support near this area, and then it's now closing above the 50 again. We can draw a small short-term trend line. You can see that it's going like this. So maybe we can wait for it to pull back to trend and then get in. The risk will be underneath, maybe here at about 1.5%, 2% risk. And then the first target, of course, is to take out the recent highs. That doesn't seem a lot, but I think this is a low risk trade for this stock. The next one I have is Uber. Uber, um, if we draw trend lines here, we can see that it broke through the downtrend line, and then it pulled back. And now with the green candle, it seems to indicate that the buyers have stepped in. They might want to take it up more. And then if you look at the indicators, the 50 recently crossed above the 200. That's a golden cross. So that seems to be promising that this one may want to go higher. And then if you get in within the range of this green candle, you can see here, and then use the bottom of the red candle of yesterday's as the stop loss area, which is also the support resistance or support areas. So that's about 2-3% risk. And then the first target is to take out this high. And then the next one is to take out this one, this high here. That's about 9%. And then if it can do that, then the next target is to get to the $86 range. That's about 16% profit. The next one I have is CVS. Talk about this one yesterday as well. I still like it because it's consolidating. Um, and then I didn't talk about this yesterday. Is that if we draw a trend line from here up, you can see that like this. You can see that it's the price action is after it gapped up on earnings and then found resistance near the recent high, and then the gap area. Um, it came back and found support at this price range, and then now it's slowly creeping up. And it's while it does that, it's also pointing to trend to this longer trend. So if it can break this resistance area, and it looks like it wants to do that, then the risk for this trade is about 2.5, 3%. The reward could be taking out this recent high, this resistance area, that's 11%, and then the next target would be somewhere here, 15%, and then the next target is about the $80 range. So that's a nice risk reward ratio. The next one I have is STNE. This is gonna be a stock trade because it's $11.45 now. This one I like it because if we come to the weekly, we can see that it was way up there at $95, but it came down, and then for the past 2+ years, it's been forming a bottom. If we zoom in a little bit and draw a trend line like this on the weekly, you can see that recently it just broke the downtrend line. And if we draw a trend line here like this, you can see that it has formed a uptrend line on the weekly as well. It was going from the bottom, it went up, then it went down, but formed a higher low, and then eventually formed this uptrend. So this is why I like it on the weekly. And on the daily, get rid of these trend lines. I'm sorry. Let's see. Like that. So we can see that it gapped up on earning and found resistance at this area. There was a lot of price action in this range, the 1150 to 1050 to 1150 range, and you can see that it after it gapped up, it never closed below the 200 MA. So it looks like it's just trying to digest this price action here, and then if it can actually do that, then we can get in with a stock trade that's about 5-6% risk, and then the first target is this area, this resistance area. That's 10% already. It doesn't look much on the chart. And then if it can do that, then the next target is to take out this area. That's 20%. And then if it can do that, the third target will be the high in August of last year. That's 30%. So that's a nice risk reward trade. Next one I have is ABT. ABT, I don't think this one is ready to go in yet. We don't want to chase this green candle. That's not the right thing to do. But what I want to point out is after it got beaten down from here, is formed a bottom or a base, a box area, and now today it gapped up and closed above this box area. So what I want to see this do is for the price to consolidate in within this green candle, and then form maybe another small box within this green candle, and then that's when it will be the best time to get in. Because if you get in right now, if you get in here, your stop loss has to be somewhere underneath this green candle. That's 4%, and then your first target is somewhere here or the recent high. So unless you do the option trade, the risk reward ratio is not so great. And then this stock is over $100 stock, so the options are The prices are pretty steep. So I don't think this one is ready to enter yet, but it's good to put on the watch list to see what the price does over the next several days or weeks. And last but not least, STZ. STZ is on my chart, on my radar. I actually got into this trade yesterday. So this one, it formed a short-term uptrend like this, and then after it closed above the 50, it came back down, but then it's found some support near this area, the 176 area, and then it was bigger candle, and then it turned into very small tight candles, and then yesterday it formed this big green candle. That's when I saw it, and then I placed a um, bull put spread to take advantage of this price action. So that one is in the green, so that's a good guy. I don't know what this is gonna do. One thing to consider is this one has earnings, I believe, on April 8th. So I'll probably close that trade before the earnings because I don't want earnings to affect my credit spread. Um, don't ask me why. I don't want to hold my stocks over earnings. Long story, some painful stories. So always on the lookout if a stock is about to report earnings. This is another reason why I like to trade ETFs versus individual stocks. ETFs are less gappy. Individual stocks, on the other hand, sometimes they get affected by news or earnings and other things. So, all right, that's all I have for you today. Hopefully, you find some value in it. I'll talk to you next time. Okay, bye for now.